Hi guys, welcome again. 6 signs that you're becoming a successful trader. So number one, you are fully happy to wait for your trades. What does that mean? You're not in a rush, you're not looking to chase the next trade, and you're in a position where you're fully aware of the parameters that you're looking for. Therefore, happy to sit and wait and get the opportunities that you're looking for. Guys, this comes with a little bit of experience, a little bit of skin in the game because of several things. Number one, when we come into the trading game per se, we're coming in with a lot of emotions. We're coming in thinking that we're gonna make large amounts of sums pretty quickly. We can say to our boss goodbye, and you can go and live on a beach and do whatever you want within the space of 6 months. As we know, this is a business, and that's not really realistic. However, that emotion, although is necessary, we need to convert that emotion into a business mindset. What does that mean? That you're looking for the high probable outcome, the high probable event that can yield to a large return. That being the case, that means you need to study, back test, forward test, and be in a position that when that opportunity shows itself, you can perform. What does that mean? That you need to spend a little bit of time in the markets to get to that place. Yes, absolutely. Once you get there, you can say your boss goodbye and live on a beach if you want, and so on and so forth. But never forget that you are a glorified employee of the market, and you need to build stats and data to back what you are looking for and what you are trying to do. Second one is that we don't trade every day. Trading is not something that you have to do every day. In fact, the more capital you gain, potentially the less you want to trade. Why is that? First of all, you want to leave your capital for your A-star setups. And second of all, not every day the market is going to set up for your opportunity or the context that you're looking for. Yes, there is 6.7 trillion running up and down every single day. So in theory, in your head, you're thinking, well, if there's 6.7 trillion running up and down every day, I am sure that I can take advantage of the market every single day. That's not really the case. Although there is market movement, it doesn't mean that there is an opportune time for you to execute. As we know, the markets can go up, down, sideways, but the context that you require for you to take advantage of the market may differ from week to week, month to month, and year on year. So what does that mean for you as a trader? You need to wait for your right context. That context is not going to develop every single day. Plus, if you're executing every day and you're executing flawlessly, that to me sounds like you have studied multiple scenarios, multiple events over a large period of time. Don't forget, guys, that we are humans. We are more susceptible to mistakes than your normal algorithm or robot out there. So what I normally say to newbie traders is focus on one approach, focus on one setup, get very good at it, trade it, get some money behind you, and then develop another one, which will then lead you to building a playbook. But at the very beginning, because we have so much emotional charge as well, just learn to focus on one setup. Slow everything right down and get to a place where you are consistent. Third one that we're looking for is that professional traders journal every day or journal every trade per se. Now, guys, this is extremely important. Journaling is like the bookkeeping for your business. No business works or functions without an accountant. As far as I'm aware, if you have a business and you don't have an accountant, I personally can't take you serious. The accountant is there to let you know, in theory, what the cash flow of your business is doing. Are you making money, but do you have too many outgoings? Are you making money or are you not making money? Are you in a deficit? What's the projection of the overall business, and so on and so forth? That's what the accountant is there for. That is what your journaling is there to do. Also, are you trading your setups or are you just trading randomly? Are you trading something that you've studied? Did you perform today? Did you not perform today? Multiple times, your MT4 or the history that you're getting from your trading platform will only tell you your entry, your exit, and your close, pretty much. Nothing else. But the journaling will let you know why you did half of the things that you did. Hence the reason why it's so important to journal. Why did you move your stop loss to break even? Was it a good time to move your stop loss to break even, or did you just do it out of fear? Why did you exit that region? Did you exit that region because you came back to some area of resistance where you believe that maybe the opposite party can come in, or did you just exit because you just saw the number that was on the screen and came out? These are psychological mistakes, guys, and the only way to be aware of them, or the only way to improve your game, is by journaling. Right, topic 4. We have to review our losses. Most traders at the beginning, including myself, I tried to avoid reviewing my losses. Why is that? It made me feel crap. It made me feel useless. I wasn't happy. It just made me feel that, I'm just not good at this. Please pay attention to the word that I was using. Feelings. Guys, unfortunately, this is a business. You have to review your performance. There is no way around it. You have to go past your feelings and say, what am I actually doing? If you're taking 20 trades a day, it'll be very hard for you to actually go through and review what you did in the first place, yet alone your losses. So you want to be in a position where you hold yourself accountable for everything that you're doing in the markets. Reviewing your losses not only helps you understand where you're going wrong, it also helps you to understand yourself, which is way more important than understanding where you went wrong from a technical standpoint. Getting a better understanding of you as a trader will enable you to know where you perform best and where you perform the least. What does that do? It improves the back end and the front end of your business automatically. You stop the trading where you don't perform. Simple as that. What does that do? It saves you money, but most importantly, saves you mental capital, or the times where you really do have to execute and you really do have to perform. Point 5, we don't overtrade. We are no longer overtrading here, guys. It's done. We take a trade, we execute our system, we walk away. If we take a loss, we're not going back into the markets trying to make it back. We're not just going into the markets for the sake of it or because we feel that we're going to get lucky. No, this is a business. We are executing for business purposes to enrich ourselves through a system, a process, a method that we studied and collected data on. There's no reason to overtrade. Now, if you're someone that executes 10 times a day and is part of your plan, as far as I'm aware, you haven't overtraded. But if you're someone that's just executing for the sake of executing and you don't really know what you're doing, or you know what you're doing, but you still indulge yourselves in the markets, you are overtrading. You're still a very emotionally charged, which means to me that you're not ready to make that mental switch and look at this from a business perspective. You still want some action from the market. And really and truly, you shouldn't be looking for any action in the market. It should be boring and it should be methodical. Last but not least, we brush off the trades. Hey, if we have a loser, it is what it is. We move forward. We understand that it's a game of probability, and we also understand that we're gonna cock up from time to time. We're humans. I'm human. It doesn't mean every single trade that I take, it's gonna be pixel perfect. There's gonna be times I'm going to make mistakes. As long as I record them and then I'm in a position to know that this is what I need to do better, that's it. I'll move forward. There's nothing else I can do. It is what it is. We're not there dwelling and thinking about, you know what, I should do this better. Let me just go back in the markets and squeeze a little bit out. Now you're no longer being rational, you're being emotional. And being emotional in the markets never works, guys. It never works. It is not a trading plan. It is not a plan. It's not a way of executing. You're actually more susceptible to giving more money back into the markets. Take the loss. It is what it is. Leave. Maybe go outside, go to the park, something. Burn off that feeling or that urge to try and go back into the markets and make your money back. Shut the laptop, get out, take, 15, 20 minutes, breath of fresh air, come back in and reassess the situation. That's it. That's where you want to go and that's how you want to be. If you feel that some of these are in a position where you're starting to get them, understand them, or actually behave within them, then you're on the right path. You're on the right journey. Keep going. Don't worry. You're eventually going to get there. Take care, guys.